So there is a ton of just insane stuff currently happening to Senseonics stock, being up more than 5% again the last trading day. As we peaked right above $4 however, and we're selling off more than 30% since the recent highs, this also means that it's going up again for the stock, marking the beginning of a potential recovery. So what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So what Senseonics basically does is providing implantable glucose monitoring systems or CGMs for people with diabetes, while literally being one of the leading medical technology companies to do so. But what makes the company so special however, is the way it is actually bringing its products to market and commercialize them, which we'll take a deeper look at in a second. And there's one thing in particular everyone is talking about, Senseonics Eversense XL product, the world's first fully implantable CGM is claimed on their website. But that's not the main reason for the stock to be up so much however. In fact, it's the incredible hype the stock got from retail traders recently, making it skyrocket way more than 1,000% at the beginning of the year and a second time just a few weeks ago. But the stock is not that popular amongst investors without reason. It is a single-digit stock with a small float of just 280 million shares, high short interest with 25% of that float sold short and tons of retail attention, as pointed out in our last video. But, and this is crucial to consider for our prediction at the end of this video, this hype isn't the only important catalyst for the stock. One of the biggest players in the area, Essentia, has recently partnered up with Senseonics with the goal of bringing Senseonics core products to a much broader market. And in addition to raising capital via convertible debt, it has also provided significant validation to investors. Additionally, and we briefly talked about this before, this also is a huge step towards long-term growth and profitability if this collaboration works out as intended. Nevertheless, Senseonics is currently still an extremely new company, so it makes sense that it doesn't generate that much revenue. In fact, the company brought in less than $5 million in revenue in the last 12 months, despite rocking a market cap of $1.25 billion. And there's another really important reason for this optimism of investors, next to those who are in for the squeeze. So in early February, Senseonics announced new European commercialization activities for its CGM system. With the help of its partnership with Essentia, the company wants to bring its products to market in Europe, a massive new opportunity with millions of new potential customers. And as Essentia has already had enormous success in marketing its Contour CGM products in Europe, expectations are pretty high. With its approval in the US, Senseonics is now able to deliver on two of the biggest global diabetes device markets. So if it gets received as positive as in the US, and with the massive hype from retail investors in mind, it looks very good for Senseonics stock. Nevertheless, it is certainly not cheap right now, and buying at this level is extremely risky. Execution risk remains high with the stock, and the company will need to continue to show results from its commercialization efforts. But there is certainly huge growth potential here in the company, and even going in for the short term to profit from another possible short squeeze could turn out very profitable. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.